Hello guys, and welcome to another video. In this video I'm going to be showing you live, especially on today's price action on the ICT's new 15 minute fair value gap entries. And I want you to note that for you to have success with this entry or with this type of 15-minute fair value gap trading, you need to know the essence of time. So I'm going to be using the silver bullet time on this because specific times, specific things happen. It's just random. You're going to be waiting for. You have to know exactly what time are you in there. So what literally ICT talks about is that you look for a fair value gap that was created on the other side long before the present time. So remember, for example, today, let's talk about the silver bullet. Silver bullet, this is on a 15 minute time frame. I'm using UTC plus 3. Remember, I'm using UTC plus 3. So don't make that mistake of getting confused because of the time zones. I'm using UTC plus 3. So the silver bullet, according to UTC plus 3, will begin from 11. Okay. So from 11, there. Okay, so from 11, we look for liquidity. This is 11, right? So look for liquidity. For example, in this scenario, we were either going up or low, but remember, we just attacked the sell side liquidity first, which is down here, okay? This one here. So this is a 11 a.m. Remember, I'm using UTC plus 3, and the price attacks that liquidity. But now, for you to get even a clearer picture, I want you to take a look close on the other side, the previous day, that's on Monday. What do you see here? We have a fair value gap, and it is a 15 minutes bullish fair value gap. So now let us highlight it out. Very good, perfect. Now I want you to see how everything here matches. Okay. Now we take the sell side liquidity of the silver bullet. Then where do we tap to? We tap into that previous day 15 minutes fair value gap. Remember, this is on a specific time of that silver bullet. Specific time. And that specific time, what did you have here? So this made this one to be a higher probability trade. So what you'd have done here, you just enter, for example, longs here for at the consequent encroachment of that previous 15 minutes favorable gap, or maybe just below there, the 10 a.m. hourly candle of sell side liquidity. Remember, I'm using UTC plus 3, so don't be confused. Don't be confused when I say 11 a.m. Then, of course, ICT usually talks about your target, the previous, like the other side, like the buy side liquidity, for example, here. And that would have given you an easy. Actually, this stop loss is supposed to be below this one here. So when I put that stop loss, yeah, right there, below this candle here. When I put that one there, that's already 1 to 6 hour in just a matter of few minutes, okay? Maybe an hour or some few hours. But still, if you were interested or if you knew that, for example, we are likely to go higher, now you'd have targeted these highs here, and that would be 1 to 13 hour. Now, the reason why you can target that is that when price moved away from this zone, we created another 15 minutes fair value gap here, which has not yet been filled yet, you see? So we would just adjust our stop loss from here to break even, and now let these fair value gap here, 15 minute fair value gap here, protect us, and would have won it 1 to 13 hour. You see? Now let's go to another trade for you to understand again. Now let's go to the next silver bullet. There's a lot of silver bullet that ICT usually talks about, but I usually like using only two: one for London, one for New York. So the one which we just used here, this is a London silver bullet. So let's go to New York. So the New York we're supposed to be beginning from around from I think it's 18 p.m. That is evening. I'm using UTC plus 3. Remember that. So let's find it. Let's find where 18 is. Okay, perfect. Here it is. So meaning that, and 17 began here. So meaning that we were supposed to be taking this liquidity from here. Remember, I'm using 15 minutes, so this is not hourly. So from here to here to here, Let me just mark this one from here to here. This is the the range in which we're supposed to be taking, because since we are bullish, we were supposed to be taking the sell side liquidity down here, just liquidity here, then we go up. But I want to take a closer look. Uh, we had a fair value up here of 15 minutes, okay? So when you have fair value gap of 15 minutes, this is already an efficiency. So don't expect price to come below here because already we have a liquidity to use there. So our question would be, when you look on the other side, do we have anything? Let's see. This is where our fair value gap, fair value gap is. Let's see. Yes, we do have something here. We have this massive bearish one, and also on the other side we have some bullish ones. So I'm just gonna mark this one, this bearish one, and I'm gonna mark it from the low to the high side of it. Don't worry about this, these drawings. I have another drawing here, the green one, the on the inner layer. That is a weekly time frame fair value gap. I think it's a daily or weekly, so don't worry about it. So I've drawn it, and I want to take a closer look. Now, when price opened here, we were supposed to be either taking this side of liquidity or filling this one, then you move higher. But take a look at how price just came. I think I should just delete this other one because now it's gonna be confusing. It's gonna be, but I don't know that you guys can. Let me just delete it though. It was useful for me, but it's okay. This is this bearish fair value gap you've seen here. But on the other side of it, we also have some bullish. Okay, 15 is fair value gaps, and I want you to see how price reacted from it at 21 p.m. We tap it exactly. Then, so in real sense, this acted more over support because now it is a bearish one. It's now acting as support. Okay, so price doesn't really have to come to this lower end here, and it was actually a very massive one. You see, when you have these massive gaps, don't expect price to just come randomly, to tap you in. Just you just have to, have techniques of entries and so on. So, for example, most of ICT traders knows that when you have a gap like this one, this 15 minutes here, just come and put your buy there, stop loss below there. Then you target. What are we targeting? Now that's where we gotta see what do we have. For example, we have this gap here. So we are targeting, let's say we are targeting that one there. That's 1 to 2.7 R, or you can target this this daily. I think there's a daily bearish fair value gap here, or just target this liquidity resting up here. But just to be safe, target this bearish fair value gap there, which you're likely to, I'm tapping today. And that's 1 to 2.75 R reward ratio. And that's it. This was live. This was done today. Hope you guys can see how it works. And just to go further, this is what ICT was explaining yesterday, and he even showed how he took trades using them. So let's go back to yesterday just to give you more insight of how it works. We go on a specific time frame, and I prefer to use the silver bullet. Now, silver bullet using UTC plus 3, that's going to be from 11 a.m. Where do we find 11 a.m.? Where is it? Where is it? Where is it? Boom, there you go. So I want us to look closely at 11 a.m. here. Do we have anything on the other side that has to do with the 15 minutes fair value gap? Yes, we do have this one here. And as you can see also, the other side of it, there was another bearish 15 minutes fair value gap, which was very massive, okay? But you're going to be using this bullish one because that's what matters. So let's mark it out. Let's mark it out. ICT marks it up to up there, but for some reason which I'm yet to understand, I'll be looking closely into that. But I'm just gonna go with the ordinary fair value gap markings. Okay, we have that one there. We also have another fair value gap here. Okay, so I want us to take a look at what price did. Now you see exactly At 11, we were supposed to either take this sell side liquidity, then you go up. But given that we had this gap here, you see how price exactly used it to jump up. So, for example, you if you're using this gap, of previous days, you just enter there, put our stop loss, for example, down here, because this is the gap, so we're gonna put it here. Although it's quite big, but it's fine. Let's just put it down there. And what are we going to be targeting? Of course, we have liquidity all through this area. So this will be our primary target. This one here. There we go. And that's 1 to 6, which price did deliver. This was yesterday using the 15 minutes. And also, I wanted to also take a look. Now, we were done with the first we were done with the first bullish favor lookup of those previous days. I don't know the time you use this for this. I'm only explaining what ICT does and what it did. Okay, and I'm not saying that I'm the perfect explainer or maybe I'm the perfect one who understands it better, but I know this is how it is and I've seen it work. I've tried it, for example, even today, and it's just crazy. Okay, and if you're a person you are familiar with the fair value gaps already, this won't be so hard for you. If you're a person who is familiar with the PD raise and understand things like, for example, the time and price, for example, the silver bullet, and have multiple entries techniques, it's gonna be easy for you. So our next bullet, sorry, our next silver bullet entry time zone is gonna be from 18. I remember I'm using UTC plus 3, so maybe from here. Okay, so from here we ask ourselves, do we have anything? Do we have any bearish fair? Do you have any fair value up here that can give us something? I'm trying to see. I'm trying to see. I'm trying to see. I'm trying to see. We have something here. We have something here. Let me just mark it out because this is what I'm seeing close to that. Boom. Okay. I want to take a look at what happens here. So we were supposed to, or we were expecting for price to come all the way down here to take this low. If we were to trade, if we were to trade the silver bullet, we buy here, then we go. But remember, price had already done the damage. You see, using that other fair value gap, you see here, it dropped down there, and there's a reason why it happened at 17. There's a reason why. There's some other secrets why ICT don't talk about it, but I'm very sure in knows about it. On my previous video, I said I'm gonna be teaching some of my concepts about new things that I discovered that God showed me, and that ICT or anybody else out there doesn't talk about when it comes to time. In addition to what ICT has already taught, there's a reason why this one happened at this specific time. Okay, this is a time signature. Okay, I'm not gonna go so deep into it, but until I'm ready to share. So and as you can see, we were not likely to come below here because the damage like liquidity had already been taken out here by resetting that bullish 15 minutes fair value gap, and we also have another 15 minutes bullish fair value gap here. So we were not likely to come down here. We were only likely to just reverse from this, from tap this one and go. But you see, we did not tap it. So what held us? Why did we not tap it? Okay, I want to take a look. This is the 18. So this one comes and we tap it. And remember, this is the gap that I just filled here. Okay, and actually, it's kind of uh, it's kind of huge because this gap, if you take a look at it closely, it comes all the way down here. It comes all the way down here. I think I'd even marked it wrong. Sorry. It's from this candle to this candle. Okay. So we in this scenario we are gonna be using the consequent encroachment of that gap, and as you can see, price came into the consequent encroachment of that gap at 18 silver bullet time, and that's where we jump away from it. So if you are to enter, and remember, if you enter here, for example, if you enter here on that consequent encroachment, your stop loss should be down here because price might want to just fill this gap. You never know, it might just want to fill that gap before it goes up. Then what are we targeting? Let's see, we would have target this high, that will be 1 to 2 rod ratio. You'd have targeted this. We have a gap here. this liquidity spot here. That's one to almost 1 to 4 hour, and that's where exactly we tapped, and then price started coming back again. And when it was coming back again, this now today, the next day, I want to take a look closely how price still came close just from where we were. So when you hear ICT, especially its logo, you find like prices. Okay, I don't want to go deep into that. That's another secret for another day. So I hope you guys found this video helpful. And if you have any questions, please leave a comment. I'm also gonna be opening a Telegram group so that new traders can join in, where I'll be sharing market insights, signals, and maybe mentorship in future. So that's it for this video. Hope you guys enjoyed it. Hope you guys learned something. Now go back test and let's get work.